Welcome. It's a good day today. Let's see, 21st of July, 2025. Today, looking to cover all things MSTY, or at least MSTY positioning for the week above or week ahead. MSTY, of course, the YieldMax ETF. On their website, they list it. It's performed very well for those who've owned it since inception. But what I wanted to break down was, what does MSTY own? What do they have? How's the fund structured? And for those looking to the week ahead, what strike prices do they have sold against? Where do we want the stock price to head? And what kind of money will we make, assuming it gets to those targets? So on the MSTY website, they do cover what they own. And if you click this little download all holdings, it basically pulls it all into an Excel spreadsheet. Somewhat complicated. What I try to do is, on my YieldMax little following site here, I have MSTY. I have performance metrics, how it's been performing, what the distribution is per share, how that's trended over time, how your return's looking between your total return as well as your cumulative dividend. But then also in depth, you want to take an in-depth look at MSTY, how the fund is structured, what do they own, where the contracts they sold are, how their synthetic positions are structured. I try to put together a little visual that takes the information from here and visualizes it. So the main one is how the fund is positioned currently going into the week ahead. You can see they have all 2025 strikes sold for their position. In terms of what they have sold, they have the 430. Some of these that would line up they have the 450, 250, 455, 457.50, the 460, and then over here they got the 465, 470, and way out they got the 475. And what this also breaks down is how many contracts they have sold. So for example, you see here, if you can zoom in on that, it's negative 14,050 contracts at the 450. The ones they had the most sold are the 457.50 at 26,925 contracts. And then the rest of the bars just show the relative magnitudes of what they have sold. So with the stock price currently at 430, I guess since it's a synthetic, technically it doesn't hurt if it goes above the strikes, but your gains do start getting capped once you hit the 450. So of course, for a target, we want 450 by the end of the week. If it doesn't go above, that's fine. If it does, we keep gaining money, but we continually get capped up till 475. And that is where the caps end for the contracts sold. As far as the fund makeup, or if you wanted to structure one of these funds yourself, what the fund team does for MSTY is they basically have cash and cash equivalents of over $5 billion, and they buy a synthetic position, buy a call, sell a put. In the position here, we can see they got their synthetics. They got one structured at 385, they got one structured at 390, and they got one structured at 395. So since the total stock price is above all the synthetic strikes, you can see their total synthetic value is almost $500 million at this point. And all the other contracts they have sold equates to negative 36 million on the fund. So assuming the underlying stock price of MicroStrategy does not hit the strike prices I previously presented, the fund will go up by 37 million this week. That's on a per fund metric. We're doing 5 billion and $500 million on a per share basis. You can see that the share price, which is just over $20 a share, currently it's $19.80 in cash, makes up $21.50 for the total ETF, or if you buy MSTY, this is what you're paying. As far as how that's structured, so $19.80 would be in cash. $1.85 is the synthetic value that you've added. And then currently there's a 14-cent drag on the fund value that just accounts for the contracts being sold. Assuming the strike prices are not hit by the end of the week, that would go to zero, thereby increasing the ETF market cap, because the ETF market cap basically has these three components added together makes up that. And then as far as how the synthetics, so currently we have roughly 130,000 contracts for the synthetic. Since we got that much collateral, technically we can sell that many contracts. Yeah, I'm just looking at the exact figure. I guess I got it written here. It's 130,415. Perhaps in a future video or future videos, I'll show exactly what strike prices the synthetics are set at. We know it's 380, or excuse me, we know it's 385, 390, and 395. I do got the percentages for where those make up, but technically it doesn't really matter because they're all above. But total, we have 130, just over 130,000. The contracts we have sold, we do not have 130,000 sold yet. So we actually got like 32,000 contracts that are just sitting out there, synthetic positions that don't have any capped upside. So that's just 32,000 complete exposure to the underlying micro strategy. But then as far as insurance, or what I mean by insurance is instead of selling a call against your position, you sell a credit spread. So you sell a call against your position, we also buy a call at a higher strike price. So therefore, if you're capped at a certain amount, you also have the call upside, maybe $5, $10, $15 above where you sold the strike. So that if the stock really moves and it goes past the call you sold and then past the call you bought, you're just capturing upside at that point. You're no longer capped. But as you can see here, everything they have is sold. They don't have any insurance. And that's just what I try to break down here. And then just as a final point, here's how the fund's been performing. Let's see, since middle of May, it's gone from 4 billion to almost over 5 billion. Looks like about 5.5 billion in market cap. Shares outstanding continue to grow. Fund's been performing well, so this just basically shows people are continuing to invest in it, continuing to buy shares, market caps continuing to grow. Based on people buying shares as well as their assets that the ETF holds are also increasing in value. That's a quick breakdown for MSTY for this week. We'll see how it ends up and keep going from there. Thanks for tuning in.